Holy moly, we're seeing red across the board. Imminent crash to levels you would not believe is what the charts are trying to get you to believe. But is this setting up for the best opportunity of our life, or are we going to have a bigger correction and some time that we need to look for potential patience and accumulation? Well, we're going to be diving into that. We got Dave Weisberger coming on the stream today as well. So with that being said, everybody share this out to all your friends and family over on Twitter. This is live streaming on YouTube and Twitter. So all you got to do is go to @Kellam or @Academy BitLab, hit that retweet button and show some love. You will be entered to win. We always draw from the people that are actively hitting that share button. Hit that like button. And everybody, we're going to be diving in. We got some very important key charts and some metrics you may not be paying attention to. So everybody, let's get it. Let's dive in. And yeah, you may not want to hear it, but the truth is the market is still pumping as we speak. When you look at this on the macro, we're in a very necessary correction that makes sense when you zoom out. But what does it mean? What targets we're looking at? Let's get into it. Let's go.
Altcoins, pump. I've been preparing for this. Can't nobody tell me nothing. Bitcoin, pump. Altcoins, pump. I've been preparing for this. Can't nobody tell me nothing. Bitcoin, pump. Altcoins, pump. I've been preparing for this. Can't nobody tell me nothing. Bitcoin, pump. Altcoins, pump. I've been preparing for this. Can't nobody tell me nothing. SEC and its policies rely on whatever Gary thinks. Bitcoin's a flight to quality. I heard that from Larry Fink. Every hour losing purchasing power on foolish shouting. It's not our fault. Blame the coal. It's the political cowards when it comes to gas. Our purchasing power just got cut in half. I sit back and laugh, open my bag, fill it with stacks and sats. Bitcoin, pumping. Altcoins, pumping. I've been preparing for this. Can't tell me nothing.
And I believe crypto will play that type of role as a flight to quality. We're hearing from clients around the world.
Bitcoin, pump, altcoins, pump. I've been preparing for this.
And I believe crypto will play that type of role.
Bitcoin, pump, altcoin, pump.
We are hearing from clients around the world.
Can't nobody tell me nothing.
Crypto, depending on how you think about it. And I believe crypto will play that type of role as a
Can't nobody tell me nothing. Bitcoin, pump.
We are hearing from clients around the world.
Some people are losing their minds. Is the market going lower? Is 77K in the cards? Is there another 15 to 25% correction or more in altcoins? Is the bull canceled? We're going to be covering all this and more. We got Dave Weisberger coming on the channel in about 15, 20 minutes, but we got some key signals to watch and why I still think Q1 is going to be bullish. Let's get it. The market is showing red. Some people are losing their minds. A lot of people are getting washed out. We had over $200+ million yesterday in liquidations, with people getting a little too excited just because we started pushing up to about $102,000, $103,000. People thought it was all systems go, and they went over leveraged and completely wiped themselves out. The market is still providing opportunity. Is Q1 still going to be bullish? I absolutely think it is. We got some key charts we're going to be diving into today. We got Dave Weisberger, 30+ year in markets and absolutely tied in with the crypto ecosystem as well, as a developer, as a VC, as an investor. Really great discussion we're going to be having, but we got some key charts that we got to be looking at, and why what's happening right now is just the ultimate uncertainty brew in the market. Because when you look at this, I covered it yesterday. When you look at this, the breakdown from this point up here, 108 plus, down to this level down here, 91.5, the golden pocket from this is where we basically reached resistance, rejected, and we outlined this yesterday at this zone when this started breaking down, a potential move that would come down into this zone right here, which is a golden pocket. And if this lost, basically, I don't want to say the last line in the sand, but the last line in the super bullish sand, I would say, is this level that's right here, this 786, which is 93.9 sort of zone. And of course, we have this horizontal support and resistance that has been marked as a great level of where a lot of bounces have been taking place. So what does this mean? Are we coming down into this, losing this diagonal level? Look at this level right here. When we zoom back all the way back here to September, rejection, rejection. Look at this, rejections across this that also acted as a flip to support that we launched off of. And look at where we're coming down. Is this going to be the level? at which we sort of wash out a little below this to trap people before we rocket to the upside. We're going to talk about this. We're going to talk about what may be really causing this downtrend, and is there more down targets in sight that we need to pay attention to? Because if we are aware of these down targets, then we can take advantage of them rather than being taken advantage of by our emotions in this market. We got a couple hundred people. We got over 400 or 500 people in the room right now. Shout out to everybody that's tuned in. If this is your first time here, I can guarantee you it's not going to be your last time. My name's Kellam. Welcome to the BitLab community. We're bringing you meaningful tools, content, resources, and the unbiased targets to make sure you can always stay on the right side of the trend so we can dominate this market together. The truth about what's happening right now is this right here. Who is responsible for your losses? Looking at this, look at this guy looking in the mirror. The biggest issues that we see in this market, if we stop pushing the blame on everybody else, on the manipulation, on the BlackRock, on the government manipulation, it's this right here. It's us. We are the determiners of what our destiny is in this market. And sometimes it's about hedging. Sometimes it's about sitting on our hands. Sometimes it's about doing nothing. Sometimes it's just, no matter how bullish we are, it's seeing the downside targets. So if and when it does happen, we are prepared to either take action or sit on the sidelines and do nothing and let those sort of chop uncertainty moments play out. So let's just remember that. Let's take responsibility for ourselves. Now, when we look at what's happened in previous cycles, notice this. January 2017. This is basically the correction that happened in January post-halving. So we had halving last year, April. The January following, this is what happened. When we look at where we're at right the next cycle, 2021, the year following the halving, which was roughly about right here, we had a corrective move and January ended very bullishly. So is this the same thing playing out, or is there a bigger bearish catalyst in store where we're going to see much lower targets from here? Regardless of what happens, we have the most bullish setup in history, but because of this incredible bullish setup that everybody's aware of, it might be the catalyst that really brings max pain. And we have a corrective month. What if we don't end January in the green like we've seen every January post-halving? Well, that could be something that's in store. We need to be prepared if that's the case. I still am of the opinion that we're going to see price action be green at the end of the month. I have to sneeze. Excuse me. But looking at what's going on, I want to run through some charts, and then we're going to be talking with Dave Weisberger, who is an absolute powerhouse in these markets. He's been in the crypto markets, the legacy markets, for years and years and years, over 30 years. And he's also been building in the crypto ecosystem. This is somebody we want to talk to because they understand these legacy pressures. And these legacy pressures in the global economic landscape is very important right now because for more than ever in history, we have big market players, we have institutions, we have legacy traders and investors that are allocated and involved in these crypto markets now, specifically Bitcoin and some within the other altcoin ecosystem as well, but predominantly Bitcoin. And Bitcoin is driving that risk on, risk off narrative. So we need to understand where these risk off sort of wins might be coming from that are suppressing the market. Because if we understand that, then we can take advantage of what the majority of people are not doing. The majority of people in this market are responding to the market emotionally rather than understanding that there's bigger things at play. And when you do that, then you can have a map on the chart and figure out where to take advantage of the market rather than being taken advantage of. Now, continuing on, I just want to point something out that is a little bearish. This is from Key Young Jew. Says the Bitcoin bull market might turn out to be the longest ever, or we potentially could be coming to the end of it. Look at this. From the low to the high, 792 days. From the low to the high, 759 days. From the low to where we're at now, and this was, I think, 2 days ago. So we're at 733 days. Are we coming to the near end of where this bull market trend could be based on the length of previous bull trends? It's very possible. However, I think it's unlikely because of the buying pressure that's basically about to come in, especially with a international arms race to stack Bitcoin. Not to mention even all the corporations that at some point, I would argue in the next three years, whether it's this year that it starts, and I think it already has started, but the true acceleration of major corporations, Fortune 100 corporations, really starting to stack in, even if it's at a 1 to 3, 5, 8%, doesn't matter how low it is, but getting a Bitcoin treasury in order, that will be the name of the game. Now, when we look at what's going on here, notice from low, basically from these lows to the next low, 152 bars, 152 bars, 152 bars. And again, the previous one was the earliest one in the market cycle was 145 bars. But when we look at where we're at right now, from the halving to essentially the high, 518 days, roughly about 518 days. This was much shorter, 336. If we go to 518 days, that means we still have quite a bit of time for this market to mature and melt to the upside. Melting to the upside does not come without frustrating moments. We saw last year, we saw basically leading up to the halving and then, many months after the halving, about 7 months of price action oscillating between $13,000 and $22,000, full moves of just chopping people out. And people right now are worried because the market's not just running away. But then you also look, if we stop expecting the market to go up because all this back end fundamental bullishness that's, basically paving the way for bullishness in the market, and we realize from September to now, let's actually go to the chart. From September to now, where is September 1st? September 1st is basically about right here. From this point right here to where the market cycle top was, that was an 85% move to the upside. And right now, when you double click on this, right now, we are frustrated with the 15% move. Let's look at this. A 15% move from the top. I don't have my chart up. My bad. The measurement was basically September 1st, right here to the top. That was 85%. But now we're looking at a 15% correction. 15%, we're losing our minds. That's from this point to this low here. Where we're currently at is about 12% from that high to this current low. Now, if we did get a move that some people are speculating is possible, and it is possible, is a move all the way down to 77, that would be 30%, 28% realistically. But when you zoom back on the charts and you realize, let's turn off the indicators and just look at the price action and realize that in this portion here, from this low to this high, there is 11 moves. I think it's 11. Let's count again. 1 move, 2 move, 3 move, 4 move, 5 move, 6 move, 7 move, 8 move, 9, and then the top. Now, if we count all the dips, it would be more than that, but these are just very noticeable. And these are not small moves. That is a 40% move. This is a 26% move. This is a 41% move. This is a 34% move. This is a 30% move. This is a 37% move. We see this, another 29% move. This right here is another 23% move. And we're sitting here luxuriously with a 15% move to the downside while price action, let me double click here. Okay. This is, from this top here, measured down to the bottom, we've just accomplished a 15% move that we're in the middle of a correction of. And currently, we have not yet broke this floor. The question is going to be is if and when the price action does break this sort of neckline here, the measured move out of that is scary, but we can be prepared for it if it happens. That measured move from the top to the neckline, now measuring from the neckline, and look where it goes. Miraculously, and I did not add this line on the chart, miraculously, the measured move is down to $77,000, which would effectively also clear out, where's it at? I always forget which one, right here, CME futures. That would basically come down and clear out the CME futures gap. So at the end of the day, if it were to happen, what would it accomplish? If it were to happen, that would just accomplish the price action, have an explosive move up, coming back, retesting these highs before a likely continuation of the upside. Again, I'm saying not it's going to. I'm saying if it were to happen, we would only accomplish building yet again a continuation of a bullish structure. The question is going to be is if we lose this area and start coming down into this zone, which we're not anywhere near anything like that. We're not going to be doomers. We're not going to be gloomers. We're going to look at this chart as it stands. Let's make it a little cleaner and realize that yes, this is starting to look bearish, potentially bearish, but no pattern is a guarantee of price action breakdown. A pattern is just when you're looking at charts, when you're looking at candles on a chart, realize the price doesn't fucking matter at all. The price is just one data metric weighed against all the other metrics you're looking at. The price action that we're seeing, when you see it mapped out over the chart, you're seeing a visual exemplification of the psychology of the market as it moves, ebbs and flows from a very bullish narrative to bulls getting a little weaker. And then all of a sudden the bears take over and it's a more bearish narrative. And you're seeing this play out. And it's in context of the market cycle, of global liquidity, of things that maybe you're not paying attention to, like the 10-year yield, the global, what's going on with geopolitics. Is there going to be a strategic Bitcoin reserve? Are they just going to announce that they're not selling what we currently have? All these things are in play that shape that strength of bulls or that strength of bears over time. So is this a potentially bearish chart formation? Yeah, again, it's potential. And even if the price action comes down here and loses this, it's still not a necessary confirmation that this is going to come down to 77, but it doesn't mean you should not be prepared if it does happen. Unfortunately, people like Michael Saylor have a very long-term view and they're buying tops, bottoms, middle, because they have a 10, 20, 50, 100 plus year view. All of us, we screw ourselves by trying to catch up with people with more money by not having a strategy. We want it to go up. So the second it starts going down, we get scared, we sell. And then very likely, and it happens regularly, that's when the market reverses. So I want to run through a couple more charts and then we're going to bring on Mr. Dave Weisberger, who's going to bring some clarity to the market. It's not going to be bullish. It's not going to be bearish. It's going to be data centric and also from his experience of over 30 years in the markets. Now, this is something we can't ignore. This is $18 trillion out of Chinese household wealth since 2021. China is one of the largest global players in global liquidity and also has an impact with what's happening there, has an impact on global economies. So even if maybe, let's say it's not affecting the US yet, well, is it? We're seeing quite a bit of risk aversion currently when we look at what's going on, for instance, with the S&P 500, right here with this sort of weakness in the market. Does this mean it's over or does this mean we might just get a correction down to this level? We'll have to see. But if we do see some risk off environment in the market, even though there's so much long-term bullishness that feels programmed into Bitcoin, it doesn't mean Bitcoin has to rocket up right now. In fact, if we do feel like there's so much fundamental bullishness in the market, we should be championing a drop or sideways action in Bitcoin and allowing ourselves to not be subject to the emotions that the majority of the market is so that we can take advantage of this. Sometimes patience is the best tool you have in this market, even if you don't have a lot of capital. So understanding this, and we'll bring this up with Dave and see what he thinks, if this really holds any weight with what's going on in the market. Now, we also are seeing apparent demand for Bitcoin is actually still very high. So in the face of all this bearishness, this is actually looking still quite good. Now, if we see this flip, that could spell maybe that bigger drop is coming in the face of all the long-term bullishness. We could still see some short-term bearishness. Now, we do have quite a bit of liquidity still below us, from 96 all the way down to about $92,000. Do we need to wait for that liquidity that is below us to be flushed before it can go? Well, we're going to have to see. Now, I think I have two more charts and then I want to get right to Dave because he's the one with the answers. As we're seeing everything going on right now in the market, pullbacks. If you forget what your bias is and realize, looking at the total right here, I think this is a total too. Everything in the market minus Bitcoin. What we're seeing is this declining price action with a breakout that currently is only coming back to retest this level. RSI coming down to retest this level. Furthermore, we see the total 3, which is everything minus Bitcoin and Ethereum. This is same thing, coming down to test this level. And the last 3 times RSI has been this low has proven to be the washout zones for where we're committing people short and then it actually ends up going higher. Committing people with a deviation short going higher. Now we're coming down to test a previous resistant at flip it potentially. Again, potentially, patterns are not perfect. is this going to be that reversal? So with that being said, I've shared my piece. I've shown you the charts. Let's get somebody that has a cooler head on their shoulders, that's been in this market, that's seen the downturn in the 90s, that's seen the downturn in the dot-com bubble, that's seen the downturn in the 2008, and yet still has the wherewithal to look at this market and say, hey, maybe there's an opportunity here, because he's not only invested in the space, he's also been building in the space. You know him. You've seen him here before. It's our main man, Mr. Dave Weisberger. How you doing, good sir?
I'm fine. I mean, when you're not levered and you're positioned where you want to be positioned, it's all good, man. It really is. I think it's hysterical. Monday morning on Crypto Town Hall, we were all talking, and the one thing I said was, I'm always afraid when everybody is this bullish. Think about that. And of course, 2 days later, now everybody's bearish. And it's like, come on. I mean, it's like a fifth grade, if you ever seen, 5-year-old girls soccer teams, right? The team that wins is the coach who's capable of getting one or two of his players to move away from the ball so that when the ball comes out, they can be passed to, and then they're all alone with the ball and can score. Well, just the herd-like mentality in the market, it never ceases to amaze me, how things go. And so that's what we're seeing. But if you went through the charts, Kellam, right? You can hear me, right?
Yeah.
Yeah. Okay, good. You went through the charts. And so, it looks like we're in the middle of what looks like should be a consolidation pattern. I mean, I said a couple of weeks ago, and I can't remember, I think you were on the space when I said this, the most bullish thing for the most bullish thing that would indicate the larger impulse in the first quarter is sustained range-bound trading through to the inauguration. And that's what I said, I think at the same price level we're at now, or maybe it was 92 or 93. I don't remember where it was, but somewhere right around that 2 or 3 weeks ago. And, we've had several runs at over 100,000, and we've had several runs where it's come back down to the levels that it's at now. And the truth is that's just building a framework for a big move later. Now, I personally think the big move is more likely to be higher. Other people would say the opposite. But here's why. So if you look last night, there was about $500 million in liquidations, right? But consider the fact that the funding rates, i.e. what people pay, the amount of speculation going into that liquidation was crazy low, well below average. And so what is that telling you? What it's telling you is that the average of speculation was low, but the extreme, the people who are willing to do north of 30 or 40 times leverage was out there. And that was, those are the people who got liquidated, because for a 2 or 3% move to liquidate you, you have to have
high leverage,
very, very high leverage. And so there are still, on every breakout, so Monday created a what looked to be a breakout, people pile in at 100x or 50x leverage and say, okay, I'm going to ride this thing, and they lose all their money. The fact that it was $500 million of money that was wiped out. By the way, $500 million was wiped out. There are a lot of money made by people who are shorting into them. And so it's not like it's taking money out of the ecosystem. It's a zero-sum game. But what it's telling you is the fringes, or what they call in statistics, the tails of the distribution, and my cameras are just too high. So there are people out there who are constantly trying to do that. But that is not the dominant piece. The dominant piece are unlevered spot buying. And you know that because the funding rates are really low. Let's give some data just so you understand. The average funding rate during the 3 weeks before the market fell for the first time in 2021 was somewhere around 0.6. That's 0.6. The funding rate right now, let's look at it because I was looking at it this morning, was 0.006. So 100 times less. Let's see if I'm getting my numbers right. Hold on.
Yeah, I got it pulled up on the screen share right now on CoinGlass. 0.0068. Yeah.
Right. So it's like 100th of where it was when we were forming that top back in 2021. In other words, what I'm trying to tell you is this does not feel, the technicals of this, internals to the market do not look like a top. It looks much more like a bottom. And I've been saying that for 2 weeks, as it is both on when it's been moving higher and when it's been moving lower in this range. So this is what a range looks like. And when you get ranges, like you remember, we said the range was like 52 to 70 in that range that lasted for 8 months, but we still wicked down to 49 and bounced right back. If we got to move down below the numbers where we are at on a big wick, my guess is it would look like a V bottom, but I could be wrong. It's like you have to understand that. So now that's the technicals. Now look at where the supply demand is coming from. You have the number of or the amount of money that's coming into Bitcoin that is long-term locked up capital, like MicroStrategy, like other corporations that have now figured out, hey, if I put Bitcoin on my balance sheet, it's going to improve my stock price, right? Like we were on with Dennis Porter this morning, there's like 20 bills out there across various states to create strategic reserves. There are countries and central banks that are buying Bitcoin. He mentioned that someone mentioned the Czech Republic Central Bank. And one point I didn't get to make this morning, but it's important for your owner, for your users to understand, is that the biggest buyer of gold that has sustained gold's recent rally, over the last year and a half, it's not been retail, it's not been ETFs. The ETFs have been more or less flat to slightly down. Bitcoin's been eating into that. It's been central banks. The instant you start seeing central banks starting to put Bitcoin into the same kind of policy mix as they put gold, it's game over, right? Because that's when the demonetization starts. And just to put a fine point on it, demonetization of gold, the smallest price you're looking for at that point is $500 million, right? So when you think about the fact that most of the people who are buying Bitcoin, like myself, are looking at it as in 5 to 10 years, it's going to be 5 times this price. Moves of 1% or 2% are noise. From a trading point of view, set your stops, understand what can happen, be ready to have dry powder if it does happen on the edges, but be very careful with leverage. And that's really what I would say. Now, my personal, the other thing that's going on here is every time we have major news events upcoming, there's always a question of buy the news. Is it going to be a buy the rumor, sell the news, or a buy the or sell the rumor, buy the news? Just remember that. And we have some major news coming. The two pieces of the major news is, will Trump actually be able to take power? Obviously, it sounds like a stupid question, right? But, he's being sentenced in this stupid thing. You're laughing. I can see you're smiling. But there's still all these stories around this. And, it's bullshit, but it is what it is. But the bigger question is he going to get the appointees that we're all so excited about to go through? And is he going to – and it's not just Scott Bessent. It's not just Howard Lutnick. It's not just Paul Atkins and Brian Kintens. It's going to go through quick enough that they can start assembling their staffs, right? And it's also true in terms of the banking regulators, what's going to happen at the FDIC. You've seen Operation Choke Point, all the stuff that's come out. There's been a ton of news lately. We're going to get a pretty quick idea because one of the hardest appointees for him to get through the Senate is going to be Hesketh. And that's coming up now. They had their first hearings yesterday. So we will start to see whether or not he's going to be able to maintain the majority of the senators and get his appointees through expeditiously. If that is true, then this market is going to rock and roll because that is not priced in at all. There's no way. People are pricing in a long delay.
So then what do we do right now? Because, obviously there's a huge number of people that are in this market that I feel like it's becoming a gateway for people to be more aware of economic things they never considered. Right now, everybody's looking at the historical cycles of Bitcoin and global liquidity and the halving cycle. Oh, it should be going up Q1. I mean, first off, it's January 8th. The month hadn't ended. So we have no idea to determine if it's not going to go up Q1 or not yet. But also, I mean, the 10-year yields, absolutely, that's been the talking point. Some people don't know why that matters. And when we look at other things like looking at China, I pulled up this chart, this massive sort of $18 trillion sort of,
Yeah, let's take these in turn because both of those, which do you want to talk about first? China
the 10-year?
or the 10-year?
Let's talk about the 10-year, yeah.
Okay. So pull up a chart of the 10-year for the last year. Because I know what I'm going to see. I want your audience to see it.
Do you have a preferred ticker for that?
Couldn't care less. I just want the yield on the 10-year chart.
That's not it. Hold on.
Well, what you'll see is a year ago, or maybe it was 18 months ago, we were running up against 5% on the 10-year. And that's the level where you could expect QE to kick in. That's really kind of the point. So what's happening? We have, we know Trump wants lower interest rates. We know they've cut interest rates by about 1%. And at the same time, the 10-year has moved higher. So people are freaking out about that, as they should, because it's indicative of the fact that to maintain the dollar as a reserve currency is telling people are saying, well, wait a minute, you're short. You have a much bigger inflation risk, and we don't know what the hell you're doing. Well, the reason they're doing what they're doing is because they're worried about us slipping into a significant recession, and we understand that. But understand that, in my opinion, what is the most likely scenario is if the 10-year yield starts backing up, getting close toward 5%, you're going to see some form of QE. You're certainly going to see an end toward the whatever tapering there is on the balance sheet. And you might very well see more liquidity being pushed into the market because that, Scott Bessent has made the point. He's going to be the Treasury Secretary. He has made the point that he would like to see us get out of this cycle of funding the government on the short end of the curve towards the long end of the curve. But he can't afford to do that in a world where the 10-year is actually more expensive, right? He needs an inverted yield curve in order to accomplish that. So understanding all of the interplay here, it's more likely to signal policy easing in the sense of liquidity, if not in the sense of short rates. Keep in mind as well that mortgages are and a lot of long-term buying is off of the longer end of the curve, whereas credit card debt is off the short end of the curve. So the question from the economics is what matters most? And a lot of people will tell you that the long end of the curve matters at least as much. And certainly the wealth effect of the stock market matters at least as much, if not more. And so it's setting up for what is highly likely to be an accommodative liquidity scenario because of what's going on the fiscal side, in the next quarter or two. But right now, no one's going to do anything because Yellen is, other than crisis management, is going to do nothing. Biden is eating ice cream while LA is burning. I mean, literally the country is rudderless right now. We have another 12 days without any leadership in this country. So who the hell knows what's going to happen in markets? My guess is we stay in a range. And the range bottom more or less is 91, 92. The range top is more or less 102, 103. And I think we stay there. So do I get more likely to be bullish with tight stops toward those levels? Yes. Do I think that we could reverse and start moving back toward the top end of the range in the middle of this 12-day period? Yeah, I could. But, the 10-year is indicative to me of people, very serious people, care. Because here's the thing that people should understand. No one in policy circles gives a rat's ass about Bitcoin. Everyone in policy circles cares about the 10-year yield.
So would you expect, and this could just be pure speculation, but in the last year, I think that there's, to my expectation, there's probably been a huge number of people that have come into the market that are that have come from the legacy sector, right? We're seeing big money coming in. We're seeing some corporate treasuries movement, but it's still minuscule for what's coming in the next 10 years. But we're seeing obviously a huge amount of allocations coming into the ETFs. The gateways kind of started to be open. I won't say it's fully open yet because that mass flood has not come in yet. But there's a lot more big money players that are in the market now that come from the traditional finance landscape. Do you, and as much as we want to say, my dad says this all the time. He goes, Kelly, you got to stop saying, you got to make sure everybody knows that this is not a risk on or risk off asset. If there's risk, you should be putting into Bitcoin. And I would agree with that. But on the same time, it's still so early that it's still going to trade like a tech stock. It's still going to trade like that risk on sort of asset. So with the 10-year stuff, you know, and the sort of the risk off environment, what we're seeing again, you know, the inauguration hasn't happened yet. And then not only that, post inauguration, how quickly do executive orders come out? How quickly do people get confirmed? There's still uncertainty in markets, and markets do not like uncertainty. So does a lot of these new legacy players that are in the market that trade things on this sort of very broad economic view of risk on, risk off, is that having a pretty big impact, you think, in the market because it's trading like that risk asset?
That's why we're at 94 and not at 74. Think about what your father said to you. You're talking about trillions of dollars of wealth who are starting to DCA and dip their toe into Bitcoin because they see it as a way to profit from a risk-off asset that's being priced like a risk-on asset. People, there are lots of ways of looking at the world, but something that's really important to understand is without risk, there's no reward, right? There's a reason the lowest rate is the risk-free rate, and there's premium built on top of that in the bond market. And there's a reason why the quote beta is higher in tech stocks than they are in a utility, which has fixed returns. Well, the reason is there's more risk as well. Now, what's the risk in the tech stock? Well, there's two types of risks in tech stocks, right? We always focus on one of them, which is its exposure to the economy. But the real risk, but that's actually bullshit. Most tech stocks are actually somewhat resistant because if you, especially new tech stocks like NVIDIA, doesn't really care about what non-farm payrolls are. What NVIDIA cares about is what will be the adoption of AI and how dominant will they be? And will they be bigger than Apple? And will they be the biggest AI company on the planet? And if that's true, then they're worth 5x where they are today. And if it isn't true, then that's the second risk, which is what's the technological obsolescence risk? What's the competitor risk? How stable are technology advantages? And the answer is not very high. They're not stable, right? I mean, I'm old enough to remember when Cisco was the most valuable tech stock, briefly surpassing Microsoft and IBM because they were going to do the connectivity and everybody was going to need connectivity and they were the ones who were going to wire the world, right? And, you know, we understand that all of a sudden you see other things and stuff happens. In the world of technology, it's hyper competitive. Bless you. So anyway, the point about Bitcoin and crypto in general. So let's talk about Bitcoin. As I always separate the two. Let's talk about Bitcoin. Bitcoin, the people who are investing in it from the graybeard sect are ones who say this thing's going to be worth 5 times this. Why do I give a crap? I'm not exiting. I'm not getting scared out of my position. They also know something that you know very well, and that in every single one of the bull runs that you've seen and you've measured and you've seen it, those take place over a startlingly small period of time. As far as I know, 90+% of each bull run has been done in 10 days worth of holding. So if you exit the market, right, and you miss one of those 10 days, you've given up 10% of your potential return. God forbid you were exiting the market for 3, 4, 5 of those 10 days. You've lost all of it. So that's why you end up with these people who, what happens is they say, oh, okay, I sell because I think it was high, and I'm going to come back in here. And then what ends up happening is, oops, it never gets to there, and it starts going past where they bought it. Oh my God, should I buy back in? Should I buy back in? Should I buy back in? And that's why people like, you know, Robert Breedlove always makes the joke. I think it's him. People buy Bitcoin at the price they deserve to buy it at, and you know, they can act like they're Zen philosophers when they're saying it. But the truth is, what they're saying is, if you have a view, implement that view. If you're trading that view, trade the view. I.e., if you are a long-term investor, which most of the graybeards are, they're just going to be DCAing dollar cost averaging in. They're going to have a plan. They're going to stick to it, and they're not going to give a rat's ass about how the price has moved in those days. If you are trading it, understand the regime you're in. Right now, we are range bound. Right now, it looks like if you break to the downside below 91, 92, I don't think the downside is nearly as big as the upside, but a stop and a buy-in back in the whatever the next technical level is probably makes some sense. It depends on what's happening in the market. But for absolute truth is if we break 102.3, 103 on the upside, don't be out, don't be short, and probably be long. Because that's the price where a very long-term, I was joking the other day online about a one on Monday, actually, that if we did something, which didn't happen, it would indicate a inverse head and shoulders on the 1 minute level, which is a terrible, by the way, chart, but they can sometimes work, but it has to be with conviction. It didn't happen. But you start looking at chart patterns, where you get to inverse heads and shoulders at 4 hour and 1 days, all of a sudden that matters. People are obsessing right now about the 50-day moving average. That's the other one that I love. Every single time it goes below the 50-day moving average, people start saying, oh my God, the end is here. Do a chart of this entire bull run, and I think it's 3 times already. It's had days below the 50-day moving average. So
yeah, I mean, quite a bit of time. It actually oscillated around it back in that 7-month period. This actually shocks me. The 7-month period of the run up before the halving and then the sideways action. What's really impactful to me when we realized that we had, just these massive moves, multiple moves that were as big as the entire bull market had ever gotten to back in 2017. 6, 7 times, boom, 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 boom. 14 to $22,000 moves, and people are out of their mind. And now it's up here range bound, up in the $90,000 to $105,000 range. It's spectacular. But I guess the question is right now.
Here's the point. You need to look at those moves in terms of percentages. The moves that we're talking about now that has everyone freaked out today in a percentage basis is tiny. It's really small. A $3,000 move, on a $90,000 asset compared to a $3,000 move, which is a 1-day move when it was at 29,000, a wick down to 26,000. Remember that 2 years ago? That move was in a day. It was a 5-minute move actually that did that. We don't have 5-minute. We haven't had anything close to that. That would be a 5-minute move today. Just a 5-minute move of 10,000. We're not seeing that. That's a liquidation cascade. Now that happened on the back of a week or two of high funding rates, of significant speculation, and we haven't had any of that. So that's why the volatility on percentage terms is lower. It's because we haven't had that speculation. What we're finding are patient buyers meeting speculative sellers when you see these down moves. And on the up moves, we have patient buyers and speculative buyers trying to jump in front of them and saying, oh, wait a minute. It's like the old cartoon. I always love the way of thinking about it. Remember the old Roadrunner cartoon? Yeah. Wile E. Coyote's chasing the Roadrunner. He's in a cloud of dust, and he's chasing the Roadrunner, and the Roadrunner has made it to land. The dust dissipates, and he looks, and there's no one below him, and it's like, ooh, boom. If you're speculative buyers and the patient buyers are like, I don't want to pay up more than 2 or 3% today, and that's it. And they push it up 5 or 6%. Well, guess what happens? The real buying interest is down here. They were up here. They have tried to sell to someone. There isn't anybody, and you get a cascade back down to here, and of course it overcorrects. And so you see a lot of that. Is that what we're actually experiencing now based off of Monday, when we still have another 2 weeks before the inauguration? We still have probably a month before we're really clear about executive orders, and the executive orders people are worrying about or talking about have to do with making sure that Bitcoin startups and Bitcoin funders and large companies can invest in Bitcoin without banking retribution, right? Making sure that we get a new head of the SEC in to allow the broker-dealer community to all start offering Bitcoin trading services. I mean, there was a news story about Morgan Stanley saying, okay, we're going to apply for E-Trade to do this. But you notice It's not Morgan Stanley, not yet. They're not going to do Morgan Stanley, Goldman Sachs, UBS, the actual humans, as opposed to the self-directed trading, until there is regulatory clarity. It's just not going to happen. There's too much risk for them. When that happens, you now will have an army, tens of thousands of financial advisors pounding the table to their clients to buy Bitcoin. What does the price look like when that happens? And that is coming. But is it going to come in 2025 or is it going to come in 2026? We don't know the answer to that yet. And so none of that is priced in. And when we start seeing indications of that, that's when you're going to see it. That's when you're going to see. That's why the inauguration in the first 10 days could be a sell the news event if it goes slow. It could also be a massive buy the news event if it goes fast.
So on that news, because I know we're going to be wrapping up here in a second. So I got to ask,
China.
As much as we've been looking at the historical trends of Bitcoin and halving cycles, is there a potential systemic risk of everything we're seeing, not only with China, but also the fact that we have this huge amount of commercial real estate in the US that's all basically, I mean, more underwater than we've ever seen, like on an exponential level compared to 2008. And it's majority held, these loans are majority held by regional banks. So is there a potential that this cycle is not only met with this mass uncertainty of economic basically destruction, but also the most bullish scenario we've ever seen with the path being cleared for Bitcoin? How do we make sense of this? Is this something that could change the nature of these cycles moving forward indefinitely?
It's really important to understand. So the third or fourth move in the chessboard is massively bullish for Bitcoin. Why? Because the only answer to those situations is to flood the market with liquidity. But I said it's the third or fourth move. If you look at the global financial crisis, if you look at every other time that there's been a major significant economic event that was met by a fire hose of liquidity, the first impulsive move is down, and it's down with a very high correlation. Why? Because when things start collapsing, people sell what they can sell, not what they want to sell. So you generally, if we saw a 10% down day in the stock market, if we saw a massive sell-off over a couple of day period, don't kid yourself. Bitcoin's going to drop as fast. I think the beta, as it were, to the downside will be lower than people think. So, I have one of my friends, Mike McGlone, thinks that if the stock market drops 10% today, Bitcoin will drop 30%. I think he's on serious drugs. He totally doesn't understand how much more of the buying has been from patient spot buyers who won't sell versus the speculators who will dump everything in a mass panic and rout. That percentage has shifted, right? And it's clearly shifted. So no, I think that you could easily see Bitcoin dropping pari passu, maybe 15% of the stock market drops 10%. But that's what you're looking at. Do you remember the single best day for buying Bitcoin in our recent history? It was the pandemic day,
2020.
When all markets were collapsing over the weekend, and Arthur Hayes kicked the cord out of the machine at BitMEX to keep Bitcoin from not falling below 4,000. And then Powell came out hours later and said, "Don't worry, we're here. We're going to throw in the liquidity." Now that all happened really fast because people thought the world was ending. I don't think anyone expects a world-ending event, but it still is the same idea. The one thing the governments of the world are not going to allow happen, they're not going to allow the financial system to freeze up. So they are going to insert liquidity. The last time we had a commercial real estate issue was with Silicon Valley Bank when that went, right? What did they do? They put this massive howitzer called the BIFT, whatever it was. It was a $4 trillion credit facility that banks could tap into if they needed it. What happened? Massive rally in Bitcoin, right? We saw it. And you expect that, but that doesn't mean it can't go down first. So from a trading point of view, being nimble, having dry powder, looking to see if these events culminate, if there is a major sell-off, that's when you really want to be buying the dip, if you think that that's a possibility. I personally think that they're trying to anticipate it more these days, and I'd be surprised to see that possibility, but it could happen. But that's the why. So if you're right, China is going to flood their market with liquidity. They can't afford high-profile bankruptcies. They can afford the housing market to drop. They can't afford the lenders to the housing markets to all fail en masse. That's what they can't afford.
Well, as you were talking about that, I was looking at this global liquidity chart. I hadn't really noticed it before because I don't really want to compare the current cycle to what we saw in this 2018 to 2021 cycle, just because there was so many random things that occurred here. But looking at 2017, 2016, we actually saw the global liquidity, the speed at which it dropped here was also in the strength of this, sort of the coiling up of the bull. And then once the global liquidity kicked on, boom, we're seeing a very similar thing here where Bitcoin has been actually, let's be honest, we're up 85% since September 1st. And global liquidity has been dropping. So what happens, even with, maybe another 5 or 8, even 15% drop, when this does kick back on, I do think we got some incredible possibilities there. But Dave, I appreciate you being here with us. I always like the well-centered and non-biased approach you have to this market. Everybody, make sure you go and give him a follow. It's right here at Dave Weisberger 1. Let me zoom in here. Boom, you can see it there. Make sure you give him a follow. I always love having him on here. Do you have any final thoughts that you'd like to share? Any dates coming up or anything you'd like to plug while you're here with the fam?
Well, I mean, from a plug perspective, I mean, no, not particularly. Although if you are a seriously active trader and you're trading millions a month, you should probably DM me, because I'm sure that the company that I have just recently retired from, CoinRoutes, I use it for my trading because it saves me a fortune. It could save you a fortune, but it's really for active traders to shave several basis points off of your trading cost. That's the only thing that I would plug. You could also look it up on coinroutes.com. From a thoughts perspective, I think just watch the political arena and what's happening. I think that this is going to shaping up to be a buy the news event, unless we get a major rally in the next 12 days, which I don't think is going to happen. I think the most bullish thing is to stay in this range for the next 12 days. And then we'll start to see some real action when we get an idea of how the administration is shaping up.
Absolutely. Again, everybody, thank you all for being here. Make sure you hit that like button, subscribe button, ding the bell, and make sure you go over and follow Dave Weisberger. Again, I'll pull up his name thing right there so you can see it, at Dave Weisberger 1. Again, Dave, thank you so much for being here. Thank you for, your legacy world of experience, as well as well-centered and well-articulated points. And I look forward to having you back on in the near future.
Well, thank you, Kelly, and thanks for the overwhelming flattery that I think is probably a little bit too much, but hey, I'll take it.
Well, I'm here to give it. Everybody, hope you all have a wonderful day. Let's center ourselves in gratitude. Remember, we're ahead of 7.5 billion people. Let's get it. Let's stay patient. Sit on your hands if you need to. Educate yourself. But that's all we got today. Let's head over to Blockchain Basement now, everybody, and we'll see you there. Adios, everybody.